Hello everyone and welcome back to this series of videos on the Solow growth model. Specifically in this video, we are going to continue graphing the capital stock evolution and the reach of a steady state for the capital stock. So we left off checking out what happens when we have a capital stock level that is below the steady state level. So this part here of the graph. And we saw that we are going to converge to the actual level of steady state capital eventually, thanks to the production function diminishing returns to capital. Now, we are going to see what happens if we actually start from a level of capital stock that is above the steady state level. Are we still going to reach the steady state? Let's see. To recap, we graphed how capital goes from the beginning to the end of each period and how it actually grows thanks to investment being greater than the depreciation of capital, because the actual level of capital is below the steady state that is going to be reached. So we start from, again, the beginning of a specific period, and at the end of that period, capital would have grown, and so on and so forth until we reach the steady state level here. I'm actually going to rearrange my screen to have a better visualization of what happens next. Now, let's say our initial level of capital stock is above the steady state level, let's say somewhere around here. So, of course, here, which shows what we have at the beginning of a specific time period. Well, here it shows what we have at the end of a specific time period. This is going to be something like 1st of January 2025. However, we know that on the 31st of December 2025, we're going to be at this point here. So capital would have decumulated in this specific case, because probably the depreciation term, we have a higher depreciation acting on a larger proportion of capital and hence, let's say, overcoming the effect of investment. So we are actually buying less machines than the numbers that are breaking down, meaning that in the next period, we start with this level of capital stock. So this is going to be our KT plus 1, while this was our KT. And we follow the same reasoning. This is both the end of the previous period and the beginning of the new period. So we go here and we say, oh, what happens now in period T plus 2? Well, we are here because more capital is actually going to depreciate again. So capital in this case is decumulating instead of accumulating. And I don't want to draw any more lines to not make this graph too confusing, but eventually we reach again the steady state level of capital. We reached again our K star. So it doesn't really matter whether we start from a level of capital above or below the steady state. Eventually, we are always going to converge to the steady state level of capital. So whether we start from above or below the steady state. So what does it mean to be in a steady state? It means that after accumulating or decumulating, capital stops growing or diminishing. It is constant across time periods. There is another way that we can visualize such process with this graph. So in this graph, we are plotting capital in any time ahead of t against the time periods that we are analyzing. So again, the x-axis is time, but in terms of the periods after t. So for example, here we are talking about t plus 1, here we are talking about t plus 2, and so on and so forth. If we start from a level of capital below the steady state capital stock, our capital is going to grow initially at a faster rate and then slowly diminishing its growth until it reaches the steady state level. And this is what we also saw in the previous graph. The increase in capital at the beginning is much larger than the increase in capital in the subsequent period. And if we start from a level of capital above the steady state, our capital is going to decrease. It's at a decreasing rate again. So the initial decrease in capital, it's going to be smaller than the subsequent decrease in capital. Sorry, it's going to be larger than the subsequent decrease in capital. Again, the initial capital accumulation is going to be larger than the subsequent one. So to sum up, again, it doesn't really matter whether you start from below or from above the steady state capital level. Eventually, thanks to the Solow growth model assumptions, we are assuming that we are always going to converge to the steady state capital level. And to see how such conclusion is going to be useful, we are going to now move on to actually unpacking the final conclusions of the Solow growth model.